Okay, so welcome to the India market review for the week ending 29th April, Friday 2016. So the markets obviously are now closed in India. It's close to 8 p.m. and today we are looking at the question, is it a correction time or is the start of a downtrend? And depending on what that answer is, obviously, then we want to do different things. Also today, and just for the record, this is Dr. Musa on the session here, and there's some more folks on the webinar, Madhu, Vidya, and some more will join. Also, well, I think a happy accident today, which is that my regular data feed for the end of day files has not yet come. So I was just exploring what we should do, and I said, okay, it's always an opportunity to do something different and try something not new. It's something we've done before. We'll just go back to it in a sense. So what I'm going to do is maybe look at stuff a lot more in terms of action, and rather than take the old format, we're going to use the daily market report. And it's well, a very happy coincidence also that the person who's made those daily market reports possible, Vidya Shankar, is also on the session today. So welcome, Vidya, a long time. So what I want to do is first take a global view on where the markets are, and then get into stock specific action. I don't plan to spend too much time on the sector review today. Okay, so looking at the global markets quickly to get a sense of where we are within that whole space. Last week, if you remember, we had very clearly said that the global markets are pretty bullish and things are going quite well there, and overall the week should be a good one. However, it hasn't really turned out that way for India at least, and where we want to look at is how the global markets are actually in this whole picture. So let's have a look at that. So this is the Dow Jones index that you are looking at, and this is right from 2006. This is a monthly chart. Let me make this a daily chart and zoom in. Okay, so if we zoom in, then what you can clearly see is that the US has slipped yesterday, and so has actually the rest of the world. So more or less, I guess, you know, nothing really fundamentally new in terms of the India story, just following the rest of the world in spite of the result season, I suppose. One thing that I probably missed last week and noticing it now, so mentioning it is, well, this, right? And all of us know what I'm drawing, and that is negative or a bearish divergence. So that's on the RSI below, and there the RSI was at about 75, and here it was at about 71. Okay, so slight negative divergence which has actually played out. The MACD has also, done a negative crossover. So some amount of downward pressure for sure, but around this level is where some support definitely is on the US market, right? That will be at what level? 17,600. We might come there. And also one point to note, if you look at these three lines here, that the red line is the 100-day, sorry, the 200-day exponential moving average. So 17,600, both a sort of support, not a sort of a support, and also the 200-day moving average place. So possibly that we're looking at support at slightly lower levels, right? But then that's just for now. We'll just have to wait and watch and see how that goes. The S&P 500 is also very much there. Though the S&P 500 came pretty close to its life high. Didn't really break it in the terms of closing, but came there and has just basically turned down, nothing more than that. I would think that overall the longer term trend is still intact, and if and when the new life highs are made in the US market, you will definitely see a rub off on the rest of the world. Looking at let's say DAX Germany. So let me zoom into that. Of course, none of the European indices are anywhere close to their life highs. Okay. Why is this not working? 1 second. Yeah. Okay. So what we have here are the German index very close to its support actually, right? So at around 10,000 is actually very good support on the German index, and that's actually shown a green candle as of yesterday, and definitely on a uptrend. And the MACD is also looking quite healthy. The RSI is also looking quite healthy as far as DAX goes, and we should most probably see it inch upwards. Just a second. You should be looking at the FTSE on your screen right now, and what you can see on the FTSE is that it's come really to a support. And as you can see, if I zoom in especially, I'm not sure that red line is very visible. Where the cursor is, that's where we formed a hammer type candle yesterday on the 200-day moving average, and then has moved up, and right now dilly-dallying with that resistance or support around 6,300, and we should know what happens in a few days or weeks on that. But clearly, I think the uptrend right now may be threatened, but I would say still intact. Just Nikkei. Okay. All right. So the Nikkei, I guess, in some ways the culprit. The Bank of Japan did not actually do anything further quantitative easing or stimulus to the economy, which was actually expected. And that was the big fall in the Nikkei index for yesterday. This is not updated till for today, and that's the sort of set the mood for the rest of Asia yesterday. And yesterday was, of course, Nifty's expiry also. So this is where we just came down, and possibly if you're looking for reasons, that's what spooked the Asian and the Indian markets. So in summary, to put the global markets in perspective, definitely in a sort of corrective phase, especially I would say Wednesday, Thursday, Friday. The European markets are all at or very close to support levels and have taken support. The American markets just at their life high, but negative divergences. So sort of a mixed bag right now, and maybe we can expect some sort of sideways to a downish bearish move as far as the overall market is concerned in the coming few days, right? But it's my opinion that the overall trend is definitely still bullish, and overall one should probably be looking at long positions rather than short positions, unless of course there's some obvious trading advantages on that. So having said that, let's jump into the Nifty and see where the Nifty is in the scheme of things. And if we look at Nifty, this includes today's information here. is that the Nifty came to its 100-day moving average, okay, and very close to that, just took support and has gone up, right? So this is today's data, right? Having said that, given the iffiness in the global markets, really nothing great to expect. I would say from a long-term perspective, let's put weekly, right? So if you look at the weekly chart, uh, then 2 weeks of really, not doing anything. On the weekly chart, both if you look at the MACD, RSI, uh, strength, I would say, is very much there. And to me, this looks like a pause in the uptrend before it resumes. Okay. Having said that, there's one thing that is there in the daily charts that we can't ignore, and that's the gaps which are there, right? So there is a gap here where my cursor is right there. So about 7,300, if that's about almost 500, 550 points down on the market, that's a good 7-8%, would definitely be a very good place to go long. However, that would also mean that the uptrend is most definitely over, because this uptrend would be broken. So what you see is that we are at that support line, at that uptrend line, and given the iffiness of the overall global markets, I would be on the side of caution, not in any hurry to go long particularly right now, but definitely look for opportunities as and when they arise at lower levels. Right, so I'm saying that again just to clarify that on the short term, the weakness is there, this uptrend is under threat, but this window, if and when it gets closed, I think will be a good place of support and would perhaps you know uh, uh, provide a good entry point, especially for longer term investors. Okay, so given that, and also given that, like I said in the beginning, the regular data is not there, so we're taking a different track today. Let's look at not all, but the most important movers on the uh, uh, index side. So something with the software, I need to right, so fix this up because there's a lot of duplicates in that list, as you can see. Okay, so we need to do something about this. So I'll do that later. I'm not going to spend time on that right now. So let's look at very quickly which are the biggest index gainers. So the biggest index gainers is Nifty media, as you can see, right? So the media is one space where there was good strength, and you can see the media index also is showing you know, relatively speaking, compared to the Nifty, is definitely showing a healthier uptrend than the Nifty or the overall market is. So in terms of outperformers, Nifty media, well, the Nifty media index, I think some of us will already know. So I think almost 50% of that weightage is just Z. So basically just look at Z as the Nifty as the proxy for that. The next one is the realty space, and we've been harping on that for at least 2 months now. We all know perhaps that the news that came out, I think yesterday or day before, that the Mumbai, what is that, Mumbai Corporation, I'm not sure, is a Marathi name, has proposed higher FSIs, floor space index, for almost all areas of Mumbai except one or two things, and there was a big you know bullish market on the realty stocks yesterday itself, which has continued today, given that there can be more floors built now in Mumbai on the same area, right? So there was talk about affordable housing and this, that, and all. I'm not sure about that. It's just that more can be built, and even if your profit margin comes down per unit, the profit should go up simply because there are more units available at maybe a more affordable price, and then we can expect higher profits for the real estate companies in the years ahead. Actually, I don't think anything is going to happen in quarter or two. So this is more a knee-jerk reaction, a sentimental reaction rather than anything else. But the uptrend in realty space is most definitely there, right? So that is the uptrend, and I would say that it's pretty healthy, much healthier than the Nifty itself is. Let me just change that. Yeah. And then if you look at pharma, well, pharma had a good uptrend today, but sideways it's been range bound, and I've been saying this for about 2-3 weeks now, that pharma is one space where perhaps you want to look at potential shorting opportunities rather than going long opportunities. A mixed bag, so let's not go into more into that. As you can see, the index itself is pretty range bound for almost the whole of this year, and therefore really nothing much more to do. In terms of let's say the bank Nifty, so that's still in an uptrend, not too bad, and close to its, I would say, resistance zone somewhere there, and 17,000 has just gone there and come back. You can see that from the past also, I think. Yeah, that's it, not too much. So there is support there from middle of last year, some resistance here early part of this year, and then we'll have to see where it goes up. So 17,000 should be a good important key alert for the bank Nifty if you're looking to trade banks, that is, right? Let's look at PSU banks. So it's intertwined. So as you can see, the bank Nifty itself is green, 0.5% up, but the PSU banks are 1.5% down. If you remember, we have been reiterating this over and over and over again for at least a month and a half now, that the PSU banks are not places you really want to be invested in. Trade them, but you really don't want to be invested in. There's a lot of pain left, and today you can see, well, the bank Nifty is in the green, the PSU bank is 1.5% in the red, and that I think just goes further to demonstrate why PSU banks are not really good wealth creators at all. Okay, then IT. So the IT index also down. Not really sure what happened. If anybody has insights, do share. Uh, Simply, I think a mixed bag of results, mixed opinions about the result. A lot of volatility last week, and just settling down to about. It has broken. It broke the 200-day moving average today. Managed to recover above it, but I would say that there's more pain left, especially when you look at the indicator side. There is a lot of bearishness that has built in, and I would say that's it. Metals, okay, let's look at metals. So that's also been something bullish that's been doing well. So 2100, it's clearly a double top or a tweezers top there, until such time that it is able to break 2100. And also, well, looking at the long-term chart, you can see how important this is. This is a multi-year, or not a, yeah, 2013, 2014. This is a 2100 is definitely a 3-year support resistance area, and once it breaks out of that, this uptrend should actually resume quite nicely. Okay, so this is where we are. As a matter of fact, I'm tempted to say that maybe metal index rather is showing a flag, and just a matter of time that it breaks out. It's not really a flag, but just saying. So at the very least, I would say about 200-point rally. Once it breaks 2100, that means 2300 would be a potential target, and that's almost 10%, from um, current prices, so that's definitely worth looking at, right? Okay, and the other big one is Infra, so that's been uh, in the red. It's just again come to an important resistance level and just cooled off from that. So if you're a pure technical guy, I think today's class really demonstrates very well how valid and how useful resistances and support levels are, especially the long-term important ones. And you've seen index after index come to resistance levels and cool off. Just to reiterate the point, if one had these levels, they are there on the other chart, that other data I have. It's not there on the Investa that I'm using today. But if you had these on the charts and had placed them, and you were looking at these charts on a regular basis and or had put alerts, then I think we would have been amply warned or notified about this impending resistance that was there in the market, and one would have definitely taken steps to be light on the long portfolio. As of now, the resistance across the board seem to be holding, I would say, but it's not like there's a downtrend. It's just a top there, and for all you know, next week or 2 weeks down the road, we could definitely be looking at a breakout of sorts from the resistance level. What one should do actually is keep watching multiple charts or just the indexes, right? Index charts, and one index first will break out, and that's going to give you the hint of maybe what the rest of the market is going to do. On the other hand, if you see further move downs and nothing at a support level, I would say, which has to break down, except maybe the Nifty at a 200 and 200-day moving average. Most of the other indices have taken support and gone up, and just above them are resistance levels, right? So that's what you want to do. Stay cautious for now, but opportunities galore, I think, as far as potential long positions are that. So in order to identify those ones, not going to go into this too much sector-wise. I think clearly media and realty and metals are all places one can look at, no doubts about that. But let's use the IMR, the DMR today, and see if we can find things faster, which is exactly what it was meant for. Okay, so pulling in the daily market report for 29th today, there's a whole set of things. We won't have the time to go through all of them. The important ones, I think, that I was just going through it briefly before the session, are look at the EMA contractions. MA are the moving average contractions. So these are stocks which are right there, stuck at the contraction zone, and are likely breakout candidates from a trading perspective. Some of them are also, I would say, in good, decent uptrends, which one can capitalize on from an investment perspective. And then again, from a trader's perspective, you have these which are flags, but not too many very familiar names, right? Mostly mid-cap or smaller stocks. So, and that's again, we are only capturing uptrend flags here. We're not looking at downtrend flags. So in the current market environment, it's not a surprise that there are not too many, and or what are there are for some unique reason on their own. All-time high close. I'm not going to go through the details of how this works, but stocks are close to their all-time high, and this is another all-time high chart. Just tells us how recently these have been formed. And as you can see, even in today's market and yesterday's market, after the 100-200 point fall from its peak of the Nifty, you're still seeing stocks, a good amount of them. I filtered them by most recent right here, and then by the FNO side. So you can see that there are quite a lot which are very, very strongly placed, and some coming in multiple sheets. For example, Ashok Leland, right, which formed an all-time high, at 112.9 about 16 days back, or rather on 13th April 2016, is also there on the EMA contraction chart, right? So close to its life high and probably set to break out further. Just notice that. I'm sure as we go through it, we will see more. Before going there, just quickly look at this chart. You should be looking at a graph at your side, and this is the new high, new low index. And things to note is that, let me bring in the pointer. So you can see that this line, which is the 20-day, stocks making new highs over the last 20 days, actually started to come down on the 25th. So almost for 7-8 days, you're seeing clearly, if you look at the blue lines, 3-month highs and the 20-day highs have been clearly moving down. At the same time, the solid red line, which is the 20-day low, stocks making fresh lows in the last 20 days, and the dashed orange line, which is stocks making lows in the last 3 months, those have also been going up. So basically, fewer stocks making highs and more stocks making lows. Clearly, the indication being that the market is getting top heavy, and the upside potential is most definitely decreasing. And then we saw, maybe, not maybe, 200-point fall in the market from yesterday. Okay, one thing I've sort of slipped my mind, I remembered it, but again fell off, is yesterday's being derivative closing, whether the option pain data could have told us anything. Of course, right now, unfortunately, I don't have that data, so can't really comment on it. So multiple combinations of technical factors. One, negative divergences on the US markets, gaps in the Nifty. Not saying this in any particular order. You can see the new high, new closes, advanced decline in a sense, deteriorating in the favor of bears and out of the bulls, and many of the sector indices at clear resistance levels. I think if, of course it's hindsight, but if one was just tracking and doing the simple analysis, you saw that not only sector specific or stock specific issues, but also sector wide issues were clearly looking a little top heavy rather than bullish. Okay, so having said that, let's look at potential. In spite of the weakness, let's look at potential opportunities. So one thing I want to make clear is it still looks like the uptrend is there, intact. The Nifty itself is looking a little weak, but the sector indices are looking, I would say, strong, or stronger rather. And once the global market pain and correction is out of the way, I would expect that the up move should continue. I think the big thing really is the monsoons, right? And if you've been watching the news, the drought situation is really getting bad to us across the country. Maharashtra very badly affected. Very unfortunate news that in the last sometime, some 3,500 people have been, farmers have committed suicide for various reasons, but one of the main contributing ones being drought, and how bad the situation there. Partly natural causes, partly man-made causes because of politics, etc. Anyhow, leaving that unfortunate story aside, we won't know anything about the monsoons for I think at least another 3 to 4 weeks. So that's big fingers crossed, and I hope the rain gods are really kind on us this week, or this month rather. Okay, so like I said, what we want to look at is opportunities in spite of that, and I think what I will start with is, so I'm just going to quickly review this. So this is the moving average contraction. We've got Ashok Leland, Bank of India, surprisingly. Okay, that's not a surprise. Oh, hold on. Let me just do this the other way. So what I want to do is look at all-time highs and then move down from that. Okay. Yeah. All right. So if you look at this, so I just filtered for FNO. Uh, so this is a snapshot. It will tell us quite a lot of information. You may want to take out your notepad or something and write this stuff down, because there's quite a lot, and obviously we're not going to be doing all of them. So just to explain, so we've got Yes Bank right on top of this list right now, and basically Yes Bank, according to this 29th today, uh, there was an all-time high yesterday on the 28th, and the all-time high was 945.55. Today's closing is 942.95, so 3 rupees less. It's 1 day away from all-time high, 2.6 rupees, and in terms of percentages, it really doesn't add up to much when we round it off. So Yes Bank, BPCL are the front runners here, right? Just 1 or 2 days away from the previous highs, and potential candidates for either some sort of a breakout, or they're already on an uptrend or something like that. We'll have to look at that. Then in the next lot, I would think are these, not in particular selection, but you've got Petronet, Z, IOC. So Z, by the way, 50% wager of media index, and you can see that that's why it's gone up. Indian Oil along with BPCL, so that's another oil marketing company. SRF, Godrej Consumer Products, and TCS have all made lifetime highs in the last week too, 10 days, and they're all 3 to 10% away from their lifetime highs. Just to quickly review the rest, Hero Motors, LIC, Power Grid, Britannia, ACC, Infratel, Ambuja Cement, so cement stocks, Colgate, Arvind, Lupin, Cadillac, Cipla. No, these are all quite some time away. And then IRB, Sun TV, or both IRB and Sun TV did well today, and we'll just stop here. And then we've got some, Bharti, Federal, South India, and a set of banks there. Right, so these are actually quite far from, so these are all FNO stocks. We're talking about 50% away from their all-time highs, so let's forget about this. What I want to just focus on is the recent ones, and we'll just look at yeah, okay, so some interesting ones here. You've got, for example, so like I said, yes, BPCL, Petronet, all very recent ones. But if you look at one outstanding one here is Power Grid, and that is 13% from its all-time high, and the lifetime high was in 2007, so it's after 8 years. So that's like a massive double top, which is perhaps in the making. So let's look at that first and get that out of the way. So we want to get Power Grid. Okay, let me also put it in weekly. Zoom out, right? Okay, so Power Grid, well, there you have it. Essentially, that's where the lifetime high was, which is it's almost listing time, and we've come there and then sort of just moved down from that. This is a weekly chart, remember, and looks like it wants to move up, I would say. From an investor's perspective, this is definitely looking good. From a trader's perspective, one can have mixed opinions on this. This is still weekly, please remember. I'm going to switch to daily now, and essentially what you can see on the daily chart is that we've got a double top at 150, also psychological mark, right? And then we have come down, and the move down has been clearly on low volumes. I would think that around 140 it actually came almost there and then move back up. It came to the upper end of this support zone. 140, 138 I would think are really good places to enter into power grid. I doubt it's going to break below 136, 135 and then should recover after that, and once it breaks 150 on the upside and a lot of volume here. You can follow the center of the screen where the yellow vertical line is. I think a lot of buying has happened at around 130, 140 levels, and once it breaks 150 then quite certainly it's a very quick trip to around 160 on the towards the life high, and once that breaks then that will be a massive 9-year breakout, and who knows, maybe 200 becomes quite possible. So on this list here, I think that is perhaps the most outstanding one, especially in terms of time foreign, in terms of time, 9-year breakout potentially in the making. Even till by the time it gets there, it will be 13% up that you're going to make, and then after that you could make a lot more. So that's a investing idea. I'm going to move this away to another screen so that it's easier to quickly just read it and open the chart, and I'm going to start from the top now. So this is more from the traders perspective. So let's look at Yes Bank. That was right on top of our list. So new life high on Yes Bank, right? Just trying to see where the previous life high was. Okay, so the previous life high itself was sometime last year. Okay. On a closing basis, that's where it was, and what you can see very clearly now is that it's just been going up. So Yes Bank is an excellent buy. I would say 999, 1000 is the next target for Yes Bank, and from a trader's perspective, I really doubt it's going to go below 900, 890, and you can definitely look at the very good volumes that have happened in the last 3-4 days. So this is middle of this week, and today is just a correction, small one, profit booking, and if it does come back to 900, one should definitely look at buying it. 880, one should look at buying it. Nothing else in that list in terms of Yes Bank being right on top there, but I'm just looking at Federal and Indus Bank because I just had them at the back of my mind. All right, so in terms of potentially strong ones, so okay, this is definitely not there, Federal. But Indus, where is it? Yeah. Okay. So Indus is another bank which has essentially made good life high moves, and that's where we are, right? I mean that's where the Indus is, and that's where it was. That was the previous life high. It broke out of that middle of April itself, and look at the breakout, look at the support, and then from 984 it has gone to 1048, broken through the 1000 level without actually much hesitation. At some point it's most likely to come back down, and that will be a good place to enter it. So at around 984,000, do put an alert and be long on it. But even otherwise, from a trader's perspective, this is still a good bet, right? Okay, so Indus and Yes Bank, both good buys. Okay, on our DMR, I saw LIC Housing Finance. So since it's all in the finance space, I'm just looking at it. However, LIC's Housing Finance previous life high was in August 2015. Okay, so we are really not that close to that, right? Having said that, what you can see as far as LIC Housing Finance is concerned is that a pretty good support. I would definitely say this is like a pretty strong multi-month, 2-year support. And should this break 400, it's at 460 right now. 400 is most definitely possible, but 400 would be an excellent place to get into LIC Housing Finance, and 450 is also probably a good idea. It is weak, there's no doubt about it. As a trader, I would say it is perhaps worth looking at. Buy it as close to 450, 455 as possible, and put a stop loss 5-6 rupees below 450 if you're a trader. But if you're an investor, um, buy a little, and if it does well, then you're at least on an upside. And as it goes to 400, in case that support breaks, keep adding more. Big caveat with all these things for the next almost 2-3 weeks at least is the results. If this is what the results day was, I'm not sure if the results are out. If somebody can quickly pull up and just let us know if the results are in or out, then I'm not even looking at whether the results were good or bad. We just know whether they are out or in or they're pending. Then just help us to decide faster. And yeah, so technically 450 looking like a good support. Right? Okay, so this is LIC, and I don't see any other very important finance stocks there. HDFC is there lower down, and HDFC was sideways. A lot of the banks were doing sideways moves for the last 1.5 years. Okay, so HDFC, well, that's certainly not looking sideways at all. That's as a matter of fact in a downtrend. Until that downtrend gets over, one shouldn't really be looking at doing anything. Looks like if one wanted to even look at a symmetrical triangle potential, that is perhaps just getting broken, and the volume picture is not really accurate. So HDFC is definitely wait and watch. All right. So coming back to our list, and we are just to remind everyone, we're looking at stocks near their all-time highs and potential buying opportunities. So the other two, we've sort of looked at banks, and then let's look at oil marketing companies. So this is interesting because crude oil has made another 2016 price high as of today, sometime mid-afternoon in the global markets. But BPCL and IOC and HPCL seem to be on clearly their own trip. If you look at BPCL and look at the entire history there, this is again from 2006, please note that, and we're just going to zoom in. Then BPCL clearly at a double top of August last year, right there, and it has very recently just come there and cooled off. Let me do that. Right, so made a life high 2 days back and then cooled off. Volumes are coming down, so that's a bit of definitely a caution. You've got 1,000 rupees as a psychological mark right up there. Okay, plus the indicators, however, are looking, I would say, still strong, though there's definitely what one would call a loss of momentum. Interesting because well, I think now we can see the real advantages of free pricing. I guess fuel prices are just going to keep heading up only now for at least the next few, I don't know, weeks, at least by the looks of it. Looking at crude oil chart, not BPCL chart. But as long as they make more money or the sentiment is good, things would be strong. Looks like 1000 is the next logical target, I would say. In case it does come down, 920, 940 would be probably good places to buy. 900 for sure at this point. And then, you know, it could just shoot up. But I would probably just want to wait and watch. Let's look at IOC. Okay. So IOC, as you can see on that red line, resistance line, 440 came there and has just gone off. Definitely not as close to its life high as BPCL, which is a real surprise because, you know, 2010, mid 2010, again, look at the center of the screen is where its life high was, which is around 460. We are at around 420. So for whatever reason, it's behaving a little differently, right? But there's your double top around 460, and it, you know, once that breaks, then we should get much higher level. So 500, I would say, next target for IOC, but wait and watch for well, as a matter of fact, today it took support of the 50-day moving average, but again, in this also falling volumes, so be cautious. All right, so really not looking so good on closer inspection. Hind Petro, so that's also turned down. Volumes have um, diminished of late, probably going back to 800. So, you know what I would say, oil marketing, refining, watch it for lower levels, but no hurry at all to get in. Okay. All right. So that's as far as uh, oil marketing companies go. So what else is left in this is your Z. Okay. Z, Godrej Consumer Products, and let's look at TCS. Okay. So looking at Z Entertainment, okay, not Z Media nor Z Learn. One second, I'm missing something here. This is Z Limited, right, 414, yeah. So, right, 2015, right. So, if you remember the Nifty media index, almost a replica of that, and clearly good uptrend on Z Media. 420 thereabouts, I think strong resistance. The volume today wasn't really that impressive. Probably want to wait and watch as to what happens. You can see the sort of tweezers stop at 440. I think it would be a worthwhile trading opportunity till 435, 438, and then you want to be really careful as it comes to 440. If it does break 440, then I think we're really set for some much better moves. If I were to make this a weekly chart and zoom out completely, then what you do not see on this chart, and what you have to note about Z, is that it was like a dot-com chart in 2001, and we've got charts only for the last 10 years here on this tool from 2006. So you actually don't see that 2001 life high, and one would then sort of look at 440 and say that was the recent life high, which, like I said, if you want to ignore that, then that's ignore the 2001 that is high. I think that's okay, in my opinion, because that's somewhere near 1,000 rupees. So it's like one clear blue sky if it crosses 440. And point to note that we we have a moving average crossover just yesterday. So some more strength to that, and this is a moving average crossover, not less the last week, as this is a weekly chart. So I would say Yes Bank, Indus Bank, um, Z are definitely stocks to look at, right? As in Monday, Tuesday. Okay, let's look at Godrej Consumer Products. All right, so that's clearly weak right now, and though it was clear to its life high recently, it looks like it's most definitely going down. Uh, Breaking moving averages, indicators are clearly weak, most probably coming to 1240 or thereabouts. So therefore, possibly a shorting candidate till 1240, and 1350, 1360 would be a decent stop loss. Okay, if we look at TCS, this is cool. So after that court case, they lost somewhere some $930 million might be the fine. They're going to appeal it, of course, and various other things. And for the last about a month and a half, really not doing much. This is now close to its third March. All right, so third March 15. All right, so closing high at around 2800. So that's definitely quite a bit away. Sort of a triple top, closer to where we are right now, and clearly I think the volumes are very much you know there in terms of accumulation of some sort that is probably going on, and I would really want to pay attention to that line. Okay. uh, so triple top most likely I think is going to break 2550 goes, then 2800 on TCS is I think quite easy. 26, 2750, 2800 will quickly happen as far as TCS goes. After that, I think one has to be cautious. Uh, if 2800 then breaks out, then and that will be what, a multi-month resistance, then we are seeing uh, some further upside till at least 3000 in my opinion as far as that is concerned. But that could be but yeah, 6 months, a year away. Just trying to quickly calculate 3000 rupees at 2500 approximately right now. Uh, we're talking about 20% up move in TCS that could happen. Right? Okay, so that is brings me to I think the most important recent moves. Uh, would like to look at more trading opportunities from the moving average side of things, and stocks probably stuck in a range for now and most likely itching to break out. So more from trading perspective. So looking at Ashok Leland first. Okay, so first of all, that's really just, after consolidating at around 95 for almost a year and a half, it has just decided to go off, and that was the previous sort of top at 100. Of course, the new one is there at what's that price? 112, 113. Yeah. Right now looking weak, so doesn't look like there's any particular hurry, I would think. Quite possibly coming back to 100. Please note that it has not tested 100 at all, which I think very strongly feel that it will, just simply because of the psychological mark on it. And tentative, small, minor downtrend. Iffy stock should not be in any hurry. The moving averages would all bunch up there at around 106, and between 107 and 106 is where all of them are, and there is no way of knowing which side, so keep a watch, but the longer term tendency is up. Then Asian Paints. I would ignore this completely, right? So even though the daily market report did give this as a candidate, it's just a set of rules. If you look at this, it's been sideways for months now, and no sign of it going either way. Actually, one should have an alert around 900, another one around 840 and 830. Once it comes there, review it. Till then, just ignore. There is Bank of India, but I'm going to skip that. Let's look at it actually. All right, so it looks like it's broken down. First of all, it was going sideways at 95 for fall of March and April, 2 months. And if it breaks 90, then there is a gap here that it has not closed, and it has to therefore go to about 97. I think it's going to break down. Today's higher volume. So here's a shorting opportunity for Monday, Tuesday. Bank of India goes below 90 or goes back to about 95. It's definitely shorted. Once it breaks 90, hold on till at least 87 and then square off. Around 85, one should be definitely out of the longs. So that's a good shorting opportunity. Bank of India, we need to definitely find some shorts for the coming week. Let's see what BL is doing. That's also going sideways. Well, this one you can't make out, as you can see. Quite simple, however. It should be bought if it goes above 1240, and it should be shorted if it goes below 1140. Till then, stay out of it and just move on and find something else. Let's look at Hindustan Zinc. So, oh wow, this is really something. I am sure results driven or event driven, suddenly gapped up, when that, and then a dividend, 185 to 165, what, 20 rupees dividend, such a big one. And that gap still not closed, right from about 185 to 170 zone, has to go back to 185. Given the overall setup that banks and metals are in, one would position oneself long with quite a low risk, I would say. It's at what, 177? Yeah, 171. Sorry. Go long with the stop loss below 165, and as soon as it crosses 180, go to 185, 190 very quickly. Okay. So another very different stock which we don't usually look at, Colgate-Palmolive. Just boggles my mind that this is something which just makes toothpaste, and the stock which is close to 1,000. Well, that's for sure has formed a good base at 820, and I think yep, again from 2013 onwards, a pretty good base, no doubt about that, and looking to probably, right, so support in that zone, somewhere there, and consolidating. You can also see a cup shaped move in the volumes, right, in the last well, actually two. So if you just follow the cursor, I hope it's coming on your side. So middle of Feb, you had a sort of move there, attempt at a move out, breakout, really didn't happen. Then another move down to 820, and then attempt to go up again, but however it cancels. 860 on the top side, 820 on the downside, and the moving average is all the long-term ones. So you don't see the short-term ones on this chart. The red, blue and white are 200, 150-day respectively, and that's exactly where the stock is at 840, looking to break out of that, and I would strongly suspect that the breakout is on the way up. I think as a trading and as an investment perspective, Colgate-Palmolive is definitely looking good. 860 goes then in blocks of 20 rupees back to 900. It's consolidated basically for February, March, April, 3 good months, and I think just waiting to move up, right? So all the way till 820, keep buying it. 860 breakout, definitely go for it. I just want to quickly make a note. So Colgate-Palmolive, Indus, and Yes Bank, and yeah, Hindustan Zinc. Okay. Dr. Reddy's, and I'm forgetting. Could somebody quickly remind me of shorting opportunities? Which was that? It slipped my mind. All right, so we'll get back to you on that. DRL, wait and watch. Really, if you look at it from a long-term thing, 3,100, and really tough to say which side it will go. So you could take a straddle or strangle on it if you want. I would say 3,100, call and put to be bought, and the 3,300 call to be sold, and the 2,800 or the 2,900 put to be sold. Might make some money, especially if the results are not out. If the results come out and it moves in either which way. Otherwise, wait and watch. Trying to see if there's anything particular. Okay, we've got Infra also, and ACC Ambuja. Let's look at that. So we saw TCS. looking strong at a triple top. Uh, okay, and let's look at Infi. Infi 1200, 1185, good support, and it's already made a new life high at least, right? Where was that? Oh, that was the new life high. Let me just get that first. So that was the old sort of life high, and then it just went up with good volumes, and then sorry, with good results. Right. If it comes back to about 1160, that will really be a good place to, I think buy it. Otherwise, should just not be looking at it. So contraction, yes, but nothing particularly attractive. All right, so let's look at ACC and Ambuja. Oh well, this is certainly interesting. 1240, suddenly massive volumes, moves up from 1240 to 1360 in just 2-3 days, consolidates, again moves up to 1480, 1500 almost, and then comes back. So definitely not close to its life high, but the way you can see the volumes pick up is definitely some significant buying that happened around 1200, 1250, and I think this is just profit booking correction, and have to watch carefully. If it breaks 1400, then you should be out. It could easily drop down to 1360 or even to 1320, but once it breaks 1480, then we are definitely looking at a swift up move, which is, I think, quite likely. Okay. Ambuja Cement. All right, so that is consolidating, 235 to 215, and not much after that. That also moved up mid-March, just like ACC did. This is 220. Yeah, once it breaks out of 220, then it'll just shoot up to 240, I think. So both Ultratech also, I think Ultratech made a life high a couple of weeks back. Yes, it did. So this was the previous level, and that's just above. Like, where did that go? It was not supposed to do that. I just went a little bit above that. Okay. Has come back to 3100 or so. Volume's a little erratic, so tough to make out. 3100, 3000, good places, and 3100, 3120 is the 200-day moving average. Could very well take support there and move up. Okay. So All of them looking, I would say, relatively strong, except that, okay, I just looking at, hmm, it's a toss, I would say. All three looking good. Just a gut feeling that Ambuja might be the one to break out sometime next week, and that's the one you want to keep your eyes on, right? Okay. Very quickly. So obviously, I haven't done the entire thing. Not really possible to do that, but just want to look at the flags quickly and see if there's something very quick. So let's look at these. So 3M India. Ah, what a flag. Typical textbook. Just a second. Textbook flag shot off from 10,500 to 13,500 in just 3 days. We made 30%. Wow. But of course, consolidated for a whole, February, March. You had the patience. Uh, these are, retrospect always, hindsight is always great, as they say. Mm. Talking about consolidation, just look at this. It goes from 1,000 to 3,000 in 2 years, and then it stays more or less the same for 3 years. And then, so after becoming a three-bagger, it consolidates for 3 years, and then from 3,000 it goes to uh, 13,000. That's a 4x, four-bagger in 2 years, and then consolidates for about 3 months, and then again moves up 30%. Uh, from 10,500 to 13,500. Well, talking about flags, if you were to say this was a flag earlier in Feb of last, when, yeah, Feb of this year, and it went from about 9.5 to 11.5, 2,000 rupees. Then you had a painfully long 1, 2, 3, 4 month wait before it went up, and then you made another 30%. Well, now you might have to wait for another, who knows, 1, 2, 3, 4 months, but it's definitely worth it if it's going to go from say 11 to 13, even 2.5, 2 to 2,500 rupees. You're talking about probably 15,000 as the next target, and just simply on percentage basis, it will probably it'll be definitely be worth looking at. On the other hand, comes back to 11, 4, 10, or wherever, that's also definitely looking attractive. So 3M, outstanding flag. You've got Amtek Auto. So this had really, moved down a lot. There was this massive news about a debt restructuring or a debt default. If you remember, it went from 160 to 30 in just what, about 2.5, 3 weeks, and it went from 30 to 50, and then just consolidated and consolidated and consolidated. September, October, November, December, Jan. 50, 55, clearly a resistance. One second. Yeah, right. And 28, 30, clearly a support. And so came there, took support for February, March, April, 3 months, just shot off from about 30 to 40 in about 3 days, has come down, and I would think on every dip one should be looking at buying this now. It's a breakout, technically beautiful. 36, 32, not sure where it could really come down to. That's fine, but Yeah, 50 is, I would say, the next target, and once it breaks 50, which I think it will this time, then 50, 100, 120, anything becomes possible. So this is looking like a potential, what, 50%, 100% return stock, right? So Amtek definitely looking good. All right, so I'm going to put that there, and then let's go back to flags. Dynamatic. Never heard of this. Or Dynamatic Technologies. I think it's into the defense space or something. Bobby in our mentorship team used to talk about it a lot. Well, there you have it. It's shot off from 1,700 to, whoa, 2,300. What a move. Almost 40-50%. And definitely a flag. It comes to about 2,000 if it does. Again, it will, I think get bought and then just shoot off really well after that. Okay, and once it crosses 2,400, then you're seeing much higher levels, all the way to 3,000, 3,800 or something. Clearly, you can see the bowl rounding bottom, which took about 2-3 months to form, and then gradually it's just build strength and just made a pick up move. Okay. J and K Bank. Okay. JK Bank. That's how it is here. Okay. Whoa. This is a big surprise. I was definitely not expecting this sort of a moves. This is just unbelievable. Public sector, private sector bank, right? Yeah. 60 to 72. This is definitely to be bought. J&K Bank 68 looks like a really good support, and once it breaks 74, we are definitely looking at much higher levels. There's no doubt about that. So buy, and this good support all the way to 64 or thereabouts, and then once it breaks 74, we're looking at something, a good move. Talking about almost 10 rupees, so 72 to 82. Where does it take it? Okay, 74. The next resistance is definitely 80. And what is this? A multi-year resist, multi-month? Wow, look at this. If we take a weekly chart, then most definitely this is the end of a major downtrend. And again, reminding everyone that this is a weekly chart. That's the down move, even on the most outermost basis. And if I make this daily chart and I zoom in, then around 60 good support, and just how uh, shorter term trends turn. If I were to put this would be the shorter term trend there, which is was broken out with a slight move there, that itself, and it gave you 1 day's warning before it went from about 58 to 62, and then from 62 to 72. Who would have guessed? And now sitting on that trend line, I think this is the trade for the next week. J&K Bank, right? That's really going to be good. Okay, so on quite a few Dynamatic Technologies, J&K Bank. Let's look at There's one Kitex Garments. Why is this showing a flag? Okay. Anyhow, looks like a big accumulation, a big thing here from 380 went to 480, settling down, taking a lot of support. I think it is setting itself up for the next move, and that's fallen quite a lot from a live high of 1000 to 300, and it was 100 rupee stock once. 100 broke out. Look at that, 100 broke out here, went to 200. We are on a logarithmic scale on the y-axis. 200 went to 500, consolidated. 500 went to 1000. Wow. Okay, it looks like the story now repeats itself, and we might be looking into another major move on this now. Kitex on the Tuesday to be bought, and just hold on to it, could really go up nicely. Okay, Oberoi reality. Ah, was this anything to do? No, the Mumbai thing came out only last week, rather yesterday, day before. This has moved for some reason 230 to 280. Well, not a textbook flag, but sure. And 310, 320, I don't know. All right. And the last one, Supreme Industries. Oh, life high. Yeah, most, well, again, not sure how this managed to get into our thing, but is there another Supreme? It's Supreme Infra, sorry. This more looks like it. Yep, Supreme Infra from 70 to 110, again consolidating, and if it comes around 100, it's at 106. It's definitely going to get bought. Okay. Yep. Oh, Supreme Infra came back to its 2009 levels here. What a miss. Right, that's the 2009 level that we are talking about. Came there and just, consolidated there for some time and just took off. And from 70 or around, 70 rupees, just shot off to 120. That's a 50% return in just 1.5, 2 months, consolidating and just waiting to break out of 120, I think. Yep. I think the whole infra space we need to look at again. Last one, Prestige. 130 to 180. Yep, consolidation for sure. And probably go to 200 in the next move, and then we'll review. Right, so Prestige, infrastructure, reality, looking all very good. Right. Okay, so found a lot of, just wondering, maybe we should do just a lot more of these DMRs, uh, some really good opportunities as we can see, right? Supreme Infra. And what was the other one? Dynamatic. All right. So I think that's it. I mean, this is a pretty good list. Large cap, mid cap, small cap, covers the whole thing. Excellent technical setups and more than enough to keep us busy in the coming week, I think. Right. All right. So with that, going to come to a close of this IMR. As usual, please, in case you're watching the recording, would love to have your feedback. I think the question here is basically, well, we became very stock specific in this session. Looked at stocks which are on their own merit doing something really well, and once the market picks up and the Nifty starts to move around, we're going to see a lot more of those upsides on the stocks that we discussed. The Nifty itself probably has some correction to do before it moves up, right? Okay, so with that we come to the close of the session. Have a great weekend and would love to get your feedback. Thank you and Mokari Maka for next week.